Kevin, Kathy, can you hear me okay? Just testing before we get going here in about 3 minutes. Hopefully you can see that first screen and we should be ready to start. Good, good, good. Kevin, Kathy, thank you. Jed, you on? Just check with me here real quick so I can hear your voice. So if I throw it over to you. Good, good. Thanks, Kevin, for putting this on, and I appreciate you getting everybody here together in one spot. Jed, you may want to turn your mic on when I'm talking, just so I can't. No, you just may want to turn it off until I throw it over to you. I hear a little reverb, so thank you. So anyways, what we're trying to do today is tell you a little bit about what we feel are important pieces to becoming a successful and profitable trader. And we do this primarily by focusing on and teaching market profile basics in our course, both here in Bend, and we also teach online. And we have an exclusive Twitter trade idea feed that we offer that we'll touch on a little bit later. But to the start of the presentation. And also, feel free to pose some questions in the bottom box here. At the end, we're definitely going to leave some time, and we hope to answer questions. We'll try to answer as many as we possibly can. We tend to get a lot of very good questions, and I don't want you to sit back and think about something and not send it to us. So please go ahead and put your questions in the bottom box at the end, and both Jed and I will try to answer these as we go through the day. One thing I'd like to say before starting the profile again is thank you to Kevin and Kathy and Online Traders Central. I've used these guys in the past, always been a good outlet for me to talk about trading. I love trading. It's my passion. I love music. I love sports. And trading fits into really my life and following those passions. And trading is a passion of mine. So I appreciate it very much, all of you taking the time, and we'll try to keep it to an hour. Making money with the profile. I'm sure a lot of people are aware of or have used Market Profile at some point in their history. I started first utilizing the Market Profile, I would say 1995 was my first time that I started reading about it. And I had been trading at that point for just about 4 or 5 years. So I was early into the game, and it didn't really hit me until maybe 5 or 6 years later when I really started utilizing it fully. So it's the type of thing that we'll get into a little bit here, but it's really something that I think anybody can use in anything that they're using in life. So the Market Profile is very good at kind of explaining the way things work to me very clearly. So turning yourself into a consistent trader. Are you tired of losing, or are you tired of making money one day, losing big the next day, not being consistent in your efforts every day when it comes to trading? It doesn't have to be this way. And one of the things we're going to talk about is how to focus on the characteristics to make yourself a better trader when you come into this game. And it is a game. Trading is nothing but a big game. And really, the person that you're battling against is not the person on the other side of the table. It's not the person sitting next to you. It's not a market maker. It's yourself. So the characteristics of winning traders really come down to looking at yourself and making yourself a better individual, a better person. Again, checking the person in the mirror is the biggest thing, I think, to be successful in this business. So who am I? What's my experience? I live in Bend, Oregon. I've lived out here for about 13 years. I moved out here from Detroit, Michigan after working for 2 or 3 hedge funds. I started my own hedge fund, ran that. It was a short biased equity fund. The years 2003 through 2006. Prior to that, I worked for Peak 6 and Parallax out of San Francisco, Peak 6 out of Chicago. So I've got some history working for different hedge funds and trading and running my own fund. Now I just run my own money. I don't take any money. I don't look to take any money. I just trade, and I help to teach and educate and learn with others as we go on. I love the outdoors. I love the sun. I love golf. I love skiing. I love fishing, biking, hiking, and that's why I moved out here to Bend, Oregon from Detroit, Michigan. Detroit still has a fond place in my heart. I'm a University of Michigan graduate, studied economics and history, and that's my background. I've got 4 kids, anywhere from 9 through 15, and we're a very busy household, very busy. Been married for almost 20 years. It'll be 20 years this July, and I am the founder of MissTrade.info. Again, any information you want, Ryan also is on this call. He's not on the presentation today. Jed and Ryan and I make up the team here at MissTrade, and we do aim to please our customers that we have for the long term. So think about the following when you're coming into this game, and I'll keep referring back to Go Blue yourself there, Rick. How about the Michigan Wolverines, by the way, number 1 for the first time in over 20 years. I think it was 1992, 93, since Rick just threw that out there, that Michigan was number 1 again, and that was the Fab Five, and they never won it all. So 1989 happened to be my senior year in college, and I actually made it all the way with the team out to Seattle when we beat Seton Hall, and that was a great run, beating Illinois in the semifinal, who was the favorite team in that whole Final Four. And then coming on to beat Seton Hall with Ramil Robinson being one of the worst free throw shooters, making 2 clutch throws at the free throw line, and we were there at the game. Anyways, I digress. Thank you, Rick. So go blue. Think about the following when you get into this game. Do you second guess your trade? In other words, why are you taking the trade? Why did you get in? Why did you get out? Why did you not stay in the trade? Why did you get out of the trade early? Do you take profits early when the market is running with you? Is this a tendency that you find? Do you push your stops out further? In other words, do you change your method in your game as the moves are happening? And does that prevent you from making or losing more money? Does it actually make you lose more money, rather? And are you making up trades? Do you have a game plan? Do you have a narrative? Do you sit down every day and know what you're going to do? Just like the Harbaugh brothers are going to be doing the last couple weeks as they come to play against each other. I mean, you talk about two guys that are playing a game at the highest level, and they're guys that have been playing the game against each other since they were 6, 7 years old. I love the story of the Harbaugh brothers. Again, there's the Michigan connection. Their dad coached at Michigan. When I was growing up, my grandfather used to take me to Michigan practices in the early 70s when they were still open. And, those were the times my grandfather was a big proponent of bringing Bo Schembechler in. And I got to learn a lot about the gamesmanship. And watching Jim and Jack's dad coach the defensive backs at Michigan, I remember him as a kid in the mid-70s when he was coaching there. So there's a lot of things that I'm focused on for the Super Bowl game, and we'll see who wins it. I'm going to bet that San Francisco is going to win it. I have no idea what the line is on the game, but I'm going to say take Jim Harbaugh versus his older brother in this game. So if you can answer yes to any of the following questions or previous questions that I just threw out there, then you're probably not making money consistently. I prefer not to say losing money. That's pretty harsh. But you're probably either breaking even, not quite there, or losing a little bit of money every day if you're doing these things that we've listed here above. So, what things can you do to help change this and coming into this game as a trader? Trading, again, is a game. Identify your style. And working with a mentor or multiple mentors, I can tell you, is an absolute. I had them when I got into this game. I learned from some of the best, whether it was quant driven on the option side. I learned from folks that worked at O'Connor, Peak Six, Parallax. I also had, this is the type of the game that you really can't learn, at least until recently. There's not been a lot of trading universities or trading programs. So this is no different than trying to go to school to be a physician. If you're a general practice physician, you're not going to be a good surgeon. If you're a cardio cath lab physician, you may not be good at doing open heart, even though you're both cardiac specialists. So you really need to find out what your style is, and that style is going to be different from one person to the next. However, if you find a mentor that can kind of guide you in what your personality and your style is, that is very key. So once you've done that, once you've identified your style and the type of person and the type of trader you are, you want to develop a set of rules for your trading game and then stick with them. The very first rule you want to have is to really be well capitalized, and we'll get into this a little bit later when you get into this game. You shouldn't come into trading expecting to win the lottery, hit a home run. This game is basically no different than baseball, and I love to use the baseball analogy. I love getting hit by a pitch, stealing first base, pass ball gets me to third, and then sometimes a wild pitch or a sacrifice fly can score me on that third base as I'm sitting there. So it doesn't take home runs, it doesn't take singles sometimes. Sometimes it's just getting hit by the pitch that allows you to win in this game. And that's really what it's about, is driving runs across home plate. Number 3, understanding risk. I always say risk before reward. If you understand your risk, you'll be able to take care of yourself with the rewards of this game. So you really need to establish, based upon your style, based upon your rules, and how much you're willing to risk in your capitalized trading account. And this is a business. Okay, so you're not, again, trying to hit a home run every swing at the plate. You're trying to step up and be able to come back and not injure yourself by losing your capital. So staying in the game is very important in this business, and understanding your risk and establishing that risk from the get-go will take care of the reward side. The trades that are working, you need to know when you have an opportunity and to press a little bit. Sometimes I will know that I want to sell into a range. For example, let's say I wanted to sell the S&P at 1512 to 1520. If we start trading up into that area, that's an area of interest to me as a trader. We're up, at that point we'd be up almost 140 points or 10%, and we haven't had any pullback. Maybe that's an area I want to sell into. But it doesn't mean necessarily that we will see 1520 or even if we'll see 1508. But these are areas that I'd be willing to trade and build into a position. And then number 5, trade less, earn more. I say this all the time, and I mean it very seriously. My style is not a scalping style. I'm not going to trade hyperactively against the machines every day. That's not something that I've ever been successful with. There are people that can do it, but quite frankly, I can't take the shrapnel in my style. I can lose, but I can't lose 40 times in a day and win 60 times in a day. I just can't take that in my psyche. So that doesn't fit my style. It may fit your style, and what we focus on and what we teach can be applied on a micro level, but it is not ever going to be the way I trade. I do not trade for ticks. I don't trade for scalps. I try to trade for a big bite, and it really, we'll get into this a little bit further. I try to take a larger percentage of the day's range. So, for example, if we were 1% wide in the NASDAQ today, just over, we were about, I think, 27.15 to 27.47, so about 32 points wide today. Not a very wide market when it comes to the overall volatility of markets, but a successful day, a very successful day, is anywhere from a quarter to a half of that total would be what I'm looking for in a day. So in other words, if we traded 32 wide, really anywhere from 8 points to half of that, which is again around 16 points, would be a very successful trading day. So it depends on how the volatility and how the range is in the vehicles I'm trading to really at the end of the day tell me if I'm successful. And in fact today the only trade that we called on a day trade perspective was to short the NASDAQ this morning. We felt yesterday at the close it was going a little bit lower, possibly down to that 27.11. It did end up we got short. We actually covered that this morning before the market opened, got short again, a little bit lower than we actually covered, and rode that down for about 9 points. That was the only trade I took today, period, in the NASDAQ, period. In the rest of the markets, there wasn't a lot of opportunity for me. So I called one trade today in our Trade Ideas room, and that's the only trade, and I can live with that. I have no problem. So was that a good day? It was a pretty good day. It wasn't A+ day, but it was somewhere in the B range. I took a quarter of the actual range offered to me with one trade. Very low commissions, obviously, whether you're trading one lot, whether you're trading 10 lots or 100 lots, very scalable business. So trade less, earn more, something that we really focus on here at MissTrade. Understand, number 6, again, kind of coming back to number 1, wrapping it all up, you really need to understand who you are, what makes you tick, why are you in this game, why are you in the trade, and what is it going to, what is it going to take for you to get up and do your homework, do your narrative, monitor the markets, not engage, not overtrade, yet make money consistently by doing that and still enjoying yourself. There's a lot, I always say, if I'm trading well, I'm not doing a heck of a lot, and I better have a stack of reading next to me. I better have a litany of magazines, books that I'm interested in reading. And one of my greatest mentors from Parallax actually told me, I was young. I was 25, 28 in those years when I was working there. And Roger Lowe always told me, he said, Matt, if you don't have just a stack of magazines by you, you're going to drive yourself bananas. And obviously that was maybe at the precept of the internet. And you can find a lot of diversions with the internet and reading online now. But the point is, get something that takes you away from the screens during the slow times. And there is a biorhythm, and there is a good time in the market, and there is a slower time in the market, and you need to find out how that biorhythm works within your style and within who you are. So your rules, coming back to how to establish your rules in the game. Number 1, you need to identify when you will trade and when you won't trade. Okay, and I, again, this comes back to the issue of time. Time to me, you'll hear a lot of people say, a lot of traders, a lot of professional traders will tell you that price is the only thing I need. Price is the most important thing. Although I don't disagree with price as an ultimate arbitrage and very important, time is very important on a couple different levels. Time could be, when will I be in the market? When will I not be in the market? Personally, I don't want to be tied to a screen 24 hours a day. You can find markets to trade. After the U.S., you can move to the Asian markets, then you can move to the European. There's basically 3 different days within a 24-hour period. If you really wanted to trade, you could take what we teach here at MissTrade and trade every single market. I'm 46, I've got 4 kids, I've got a life outside of the markets, and I can take what I need out of most futures markets without ever having to expand my time in front of a screen beyond the U.S. trading hours. So you need to define when you will trade and when you won't trade. And time also is important on the second factor. When you look at time, and time when it relates to price, and over here on the left you see just a simple profile view. That's a balanced profile. It's obviously right there in the middle. It's traded as equally high as it has low. Pretty simple histogram for most people to understand. We're in value, so to speak, in that type of look. But what that is telling us is how much time we spent at each particular price. And that is why I say time is much more of importance to me than price ultimately. Because if we don't know how long we've been at a price, in other words, did we just tick up here at the high at E, or did we tick down here at D and that was the only time we spent there? Those aren't good highs and they're not good lows. But if we spend more time in the middle like this setup does in a very balanced value play, then that's much more important to me as a trader. The markets that you're going to trade, what is it that you want to trade? Again, I've traded everything. I've traded stocks, I've traded bonds, I've traded tons of options. I cut my teeth in that world. Very quantitative, very grinded out type of business. And I've found over the last 10 years, my favorite markets to trade are the futures markets. They're very liquid. They're easy. There's no borrowing of stocks. There's no liquidity issues like you can have with a number of options. I prefer to trade the U.S., primarily the U.S. futures markets. And that could be the oil markets, that includes crude oil, that includes natural gas. I prefer grains, wheat. The triumvirate there for me is wheat, beans, and corn. Those are my favorite items. I love the financials, NASDAQ, Dow, Russell, S&P 500. And I usually will trade one of those, the most expansive, if you will, of these. So those are the markets that I primarily focus on, along with the US dollar and a couple of the major 6 currencies, sometimes the metals. I don't like the metals as much. They're a little less liquid for most people, and they can move very erratically and very randomly, even more than most markets do. Every market is obviously random. Types of setups. Again, this next point is important. I don't think you need to have a whole book, and there are books of ways to make money in the market. I don't think you need to start out in this game with a whole book of ideas. Start with 1 or 2 quality ways that you can learn to make money, do it consistently, apply it to a couple different markets, figure out the biorhythms of each appropriate market that you're interested in playing, and go from there. So the fewer setups, and Jed and I, we've talked about this in the past, the fewer setups, and there's really kind of 4 basic setups. You can be long, you can be short, you can be counter trend, and you can be looking for a reversal. These are basically the types of basic setups that anybody should have in their arsenal. If you start with just those, you'll have enough to trade every day coming in and doing your homework when you come into this market. As far as the rules for when to enter, when to exit, and how to manage the position, you have to think about this stuff before you get into a trade. And this goes from, I think entering trade is probably the easiest thing. But then managing and how to exit the trade profitably or unprofitably are probably the most difficult for most people to handle. And again, I think a lot of this goes back to as people, we really want to spend our time working hard. And a lot of us have this Puritan work ethic that means time in front of a screen and time and putting it into the work is going to pay dividends. There's no doubt there is some truth to that. But I also think that the longer you sit in front of a screen, especially, I see a lot of former floor traders who have never traded upstairs struggle greatly with this, because you don't have to find a trade all the time. You don't have to be in the market. Not being in the market is an opportunity for you to take a break, save your energy for the times that there may be just better setups and more opportunity. So what your rules are for entering and exiting and managing a position are very critical. And it's something that we really focus on with teaching when students come here in Bend one-on-one, or if I spend online training with them one-on-one. These are things that we work on. You need to keep a journal. And this is, you'll hear a lot of people talk about this, but I really believe in this. Everybody has their own little tendencies and what they want to track. Obviously, when you bought, when you sold, what time of day, what you were feeling. Was there any major economic news? Was there any big fundamental news? Was there technical information going on that you needed to be aware of next time? So build kind of an arsenal of information, your own data mining, if you will, so you can focus on where you were successful, when you were not, and this will help you really to find out when to trade, when not to trade. Again, for me, I don't like to put on, here's a little nuance for me, I don't like to put on a new trade, a new position during that East Coast lunch hour time. That 9 to 11 a.m. here on the West Coast is typically not a great time to start a new position. Now, if I'm in a position, I may look to add to it or take it off, but I don't typically look to start a new position during that time of day. And I found that just by monitoring my trades. Again, I'm not a scalper. That's a great scalping time, 9 to 11 a.m., but I'm not a scalper, so it's not an area of time that I was interested in playing in. And I've just found after time that I tend to leave. I'll walk, I'll go grab a coffee, I'll go work out during those 2 hours. Make use of that time. I'll go visit with my kids' teachers if I have anything to talk to them about. Once you have this journal, review this daily, review this, and burn it into your head. Why don't I want to trade 9 to 11? Well, probably because I'm losing money. So this is very important as we go on here for you to focus on these rules. Risk. Again, we talked about this earlier. You alone, as a trader, as an individual in the market game, need to define your risk. What may be risky for me is not risky for you, and vice versa. But as a general rule, you really have to define what is it you're willing to risk on any one trade. And for me, it shouldn't be anywhere, in my overall trading capital, which is separate from my long-term risk capital, which is separate from my intermediate capital. I have multiple accounts to manage different times of risk. But on my trading capital, I typically wouldn't recommend anybody, and it's usually in this range, anywhere from 1% to, say, 5%, and I've seen people go to 20, but 1 to 5% of your trading capital. So if you have $5,000, you shouldn't risk more than, or if you have a $100,000 trading account, you shouldn't risk more than $5,000 on any trading idea. So, and really, with that means that really, I always tell people if you have a $100,000 account and you're trading the S&P E-minis, you shouldn't trade any larger than 10 contracts. And for you to get a maximum 10 contract position on probably shouldn't happen all in one fell swoop. I tend to leg into a position. I rarely get to my maximum size tradable position. Phil's asking 9 to 11. No, it's 9 to 11 Pacific. I'm here on the West Coast, so that would be 12 to 2 on the East Coast that I don't like to trade. Phil, is your question. So once you establish that risk, the reward will take care of itself. I do not believe in an equal or beneficial type of strategy where if I risk X, I demand 2X or 3X back, or the R factor. I don't get into those types of ratios because every market has its own range every day. I am more defined by where the market's range is and how much I expect, and we talked about this earlier. So if a market is trading 2% wide, a very good day for me is to take, say, up to a 0.5% or half of that or 1% out of the market. So for me, I establish risk. Then I define the reward of the day based on how long and how wide the market is trading that I'm involved in. So placing the ratios on your side really gets back to how wide and how expansive is the market that I'm playing in. Again, I'll use the NASDAQ again. If you look at today's range, about 32 points, just over a percent, and let's call it 1.15 wide today. Not very wide. A very good day would be if I could take 16 points out of one or two trades in the NASDAQ. That would be a great day, just based on the volume. And or based on the range of the day. That really must be looked at individually every day. The market isn't linear. It's not the same width, and it's not the same expansion every day. It's wider in oil some days than it is in the ES. It's wider in the NASDAQ than it is in the SPUs. So you need to look at different markets and find out what is widest before you can get these ratios to set up in your favor. You must accept the risk. If you don't, you shouldn't be in the game. There's a lot of people that want very mechanized systems. I do not believe in the Holy Grail. There is no Holy Grail when it comes to trading. There is nothing that you can do besides spending your time and understanding the game and understanding the biorhythm of the market, the way it works. I can teach you a lot of the shortcuts, but you still have to put the time in. And if you can't take the risk and stand losing your dollars, and you will lose money trading. Period. I lose money trading. I probably had 7 or 8 trades last week, and probably 2 of them were losers, and at the end of the week, we made money. So the goal here is to get hit by a pitch, not strike out that often, and definitely, just move the runner along. It's nothing too sexy, but if you do it well, you're going to make money at this game. So you have to accept the risk. Losses are a big part of the game. You have to learn to embrace your faults. I tell this to my kids all the time. I think it's the best lesson we can teach our children as parents is that you are going to fall. I will try to prevent you from putting your hand on the hot stove, those types of things. But I can only help you so far. You've got to learn through your imperfection that is inevitable in your life. And I think that's really important when it comes to trading. The only way to learn is to manage that risk, define it, live with it, and move on. And stay in the game. Staying in the game is the biggest piece of your success here. As far as we've kind of talked a little bit about this, squeezing all the juice out of the orange. Without winning trades and without good trades, you won't win. And what do I mean kind of getting behind this? Just because, again, a market is 32 points wide, I think it's a fool's game to think you can buy the bottom and sell the top every day. But what your rules should help you to do is take a look at what markets are moving, what markets are expansive, and then play and try to take a big bite. You don't have to eat your whole plate to be satisfied. And I use these analogies because I think I think people get hung up on trying to take every single trade. They overtrade, they overmanage, and they underperform because they're doing too much instead of just looking for areas of interest in the marketplace, using the market profile and letting it come to you. This is so key to, I think, feeding your head and putting you in the right spot that, hey, I don't have to be in the market. I mean, as I said earlier in the presentation, we did one trade today, and that was it. I really didn't even have any offers or bids out there the rest of the day, and I was fine with that because the market, I know we've got some events, FOMC today, the interest rates tomorrow. The market just goes into these shutdown modes every 6 weeks when Bernanke and the boys get together. I mean, it's just the way it is. These are some of the perverse rules of the game, and I can't force the market to move while these events that are scheduled well ahead of time and well known, and I don't want to play. It's pure, I mean, it's tough enough in this game when it's moving very, very transparently and very liquid like. And we are not in a liquid market when you get into these intervention moments like we're in today and tomorrow with the Fed. Trade less, earn more. We talked about this again previously in the presentation. Most professional traders, as I've talked about, and the ones that I've learned from and that were the best in the business, truly do trade less to earn more. It sounds so simple and it sounds so silly, but I think the biggest component with why people fail is overtrading, undercapitalization, over managing a position. Once they get in, they can't let it run. maybe the profit goes 2 to 3 points their way, and initially their target was maybe 7 to 10, and they end up taking the 2, and then it goes 15, and then they just, again, that shrapnel and counting that money at the table that I should have made based on taking the right trade just drives their head batty, and it drives you nuts. So you have to learn to stick with a trade. And that's why you don't need to trade a lot. If you have the right trade on and the right risk, the winners will take care of the losers over time. So patience here, coming back and circling back to time. We talk about this all the time. And I think, a lot of people find my style of trading probably to be boring, annoying, and that's fine. I don't really care. The bottom line here is I like this game because I like to make my living from trading. I like to trade, I like to make money. I like to go, as I did this morning, watch my 3 sons at grade school to middle school level perform in the school rock band. I like to be able to leave and do that when I choose on my time frame. My trade was over before 7:30, 8 o'clock this morning, and I was able to go watch them at 8 o'clock. So patience, knowing that I took that trade and knowing that we were getting close to that lunch hour at 9 o'clock, I probably wouldn't have a trade the rest of the morning. Also knowing that we've got the FOMC announcement tomorrow, there's no reason for me to hang around and feel guilty about not being in front of the screen. So you truly need to learn to trade less and able to earn more in this business. There are, believe it or not, more setups that are better than other setups. And you need to stay away from those that are too complicated of a trade and stick with the ones that are no-brainer. We call these no-brainer trades. Again, using the profile, you can see in many instances today, I saw it, I didn't take the trade, and it's partially because we had another layer above us, but we've been trading between this 2710 and 2740 area. Again, I'll use the NASDAQ to keep consistent on the presentation. But if you look at your charts, we've been trading the last 5 days in between that, basically that 1% range, 2710, 2740. But if we get over 40, there's basically a hole, if you will, in time and price action from 2740 to 50. But after that, there's again another layer there at 2750. So even though we basically are traded over 2740 up to 47, I think, before the market closed, and then pulled back to 44, that's a no-brainer trade. Once you see these brackets, and we talk about brackets all the time, there's these bracketed areas that become smart no-brainer breakouts if they do break it out. But I wait for the market to show me a real good breakout before I want to take it. I don't need to take every single breakout opportunity up or down. I'm willing to wait for a bigger opportunity. So although it looked like there might be 10 points in that trade and it looked like it gave you 7 max today, if you bought 41, 42, you got out, it really wasn't enough for me to warrant my interest. So I stayed away from that trade. That's not a no-brainer trade in my book, is all I'm saying, because I'm looking for bigger chunks. So as a trade less, earn more trader, you're basically a professional stalker. You're looking for, I'm a limit trader. When I give trade ideas in our Twitter feed, I tell you exactly where I'm looking to sell, where I'm looking to buy, and then when we get into a trade, if it happens, I usually have my orders in well before we're even near that price, and I'll put out an order, sell here, buy here. I will also give exact exits on my trade. Or if I'm planning on legging in, I will tell you I'm legging in. This is 1/4 of the total position here, and I will leg into the position. I'm very explicit about that. So as a professional stalker of the markets, we are looking via the profile to find the opportunities to enter this market, and then we also, based on where we enter, we know we're going to exit. Otherwise, I wouldn't put on that position. Again, part of my game plan is to know where I want to get in, where I want to get out, and behave in that manner as soon as I get into the trade. Who are you? I love this quote. It's it's a variation of Dirty Harry. A good man must know his limitations. And so for me, again, I know that I'm not made to be in the scalping business. I am not a scalper. I'm not looking to trade 100 times a day, pay all those commissions, and at the end of the day, if I'm really good at scalping, I'm going to make less than I would have making 1 or 2 larger move trades intraday as a stalking trader. So I know where my strengths lie, and quite frankly, I think the way I trade can be taught and used by most people in this game, because most people can't take that shrapnel of micro scalping and get up and do that day in, day out. It just takes too much out of you. So it helps in identifying what your style is, and that goes back to what I was just talking about. I am not a scalper. Find out what your style is. Journal what you're feeling. I mean, seriously, get in touch with how that made you feel when you made a trade. I always use this example because the most dangerous time for any trader is both, really, it can be the same situation, whether I just had a big winning trade or I just had a losing trade. Both of those are probably the most dangerous time for any trader. I always tell people, whether you made money or lost money, can be a very dangerous time, because if you lose money, or you go back into that Puritan work ethic, okay, I got to make it back, right away, find another trade. Well, the market doesn't care that you just took a losing trade. So is there really a trade right now, or are you just counting money at the table and trying to make it all back in one fell swoop? If that's the case, you're going to lose again, and it'll probably lose worse, and then that feeling, that emotion that you're going through will just build on itself, and hopefully you don't blow out. But that's when people get ugly and they do dumb things, when they're in that desperation mode. And the similar hand, just after you've had a good trade, like for example this morning, again, we take 9 points on the short side of this market. A lot of people go, okay, I want to go back in and I want to short this market again on the next rally. And the bottom line here is that would have been a bad move. There was no reason to short after that initial trade happened. And we didn't even talk about it. It was not something that we were even talking about on our exclusive feed. We were just saying, let it sit. We made a good trade. We made a big chunk, 9 points out of that morning trade. There was no reason to get back in the game, knowing that lunch was coming, that we'd settle in, see what it looks like in the afternoon. So you really have to take it easy out there in both those situations, after a winning trade and after a losing trade. Don't be greedy and don't be fearful. Those are the emotions you need to define, live with, journal, deal with them. Be honest with yourself. Look in the mirror. Again, that's the hardest part. It's not me against you in this game, although, again, many will tell you it's an absolute business. It really comes down to, how do you deal with winning and how do you deal with losing as a person? It really should be kind of, Denise Scholl, I've interviewed and read her book. She's a psychologist and a trader. You really, there's a couple things that she's talked about recently that make a lot of sense to me. Take off red and green from your screens. I've made mine all blue and yellow because I love Michigan football and I love Michigan basketball, so maize and blue are my colors. Those are the colors of my charts. Get rid of a lot of the things that we know trigger the brain in bad ways. Get rid of these things when you get into the trading game, and you'll do better yourself. Okay, a couple more slides here and then we'll open it up to some questions. Proper capitalization. If you don't have enough money to play in this game, please don't play. This is really rule number one. If you don't have enough money to risk, then the psychological damage and shrapnel is just too much. Don't play. If you don't have the money, save it up, go work, do whatever you need to do, find the money. This is a game of understanding yourself. And if you can't, again, deal with the psychological shrapnel of looking in the mirror and being in touch with your feelings, and what I was going to say about Denise Scholl is that you really need to focus on accepting your weaknesses, and you shouldn't be shamed by that. You really use that as a learning mechanism, and maybe that's not an area you want to play in. So if you're not making it as a scalper, there's probably a reason you're not. I mean, it never worked for me, and if you don't change, you're going to get just squeezed out of this game very quickly. Don't trade for the money. I know it sounds silly, and people always go, oh, what does he mean? Don't trade for the money. That's why I'm in it. Well, of course, that's why I'm in it too. But if I don't understand how to use the tools that the market profile and other simple technical and momentum-based tools are used, then it doesn't matter. The money comes knowing that I have defined the risk. Once I've done that, I know that I can stay in the game. I know that I can ground out occasionally, knowing that the next one will be a hard line drive single, and occasionally I'll get a ground rule double. But I'm not looking to hit home runs every single trade. It's just not realistic. There are home run trades, and I've had them. And I've had strikeout trades, but the strikeout trades have not taken me out of the game, okay? You really need to stay in the game, and by staying in the game means being well capitalized, understanding the risk, and focus and drive and do your work and do your narrative. You can do it with the hard work and dedication, but if you don't care and you're just doing it for the money, like anything else in life, if you want to be a movie star for the fame and fortune, you're probably not going to make it. You gotta be into that business because you like performing. That doesn't fit my personality, but a lot of people love it, and they're driven not by the money, they're driven by the urge to perform and share with people. So how can we help you? We host, again, a lot. There's really two products that we offer. We have a live exclusive Twitter feed where I will call out where I am buying, where I'm selling in the different futures markets every day. Usually 1 to 3 trades is pretty typical. In more volatile times, we may get up to 5 trades a day. I can tell you last week, I think we did 7 or 8 trades in the 4 days. It's nothing real sexy. Again, I'm not a market trader. I put my orders in ahead of time. Most people will get better fills than me, even if I am really quick on the trade, which is very often. Maybe 1 out of 20 is happening right now. But I'm a limit trader. I don't trade often. I trade very little. I'm looking for large intraday moves, and I'm patient in capturing those moves and entering the trade. I know when to trade and when not to trade. Again, I have no problem with that. Again, on the bi-weekly, we charge $88 every 2 weeks. Most people make their year over a week or 2 of this service. So I always suggest going for the annual. We also have one-on-one teaching available. Now, I do it both online, so we can share screens. I can share my screens just like you're here if you'd like, or if you'd like to come trade with me here in Bend, Oregon. We have usually 2 to 3 traders come a month to join me, sit on my screens, watch me trade with me. We've got some videos on the site that have past participants that you can look at. Happy to share with you. Again, it's pretty simple. Come trade with me. Let me share my knowledge with you, and have a good time out here in Bend. Whether it's in the winter, you can ski this time of year. In the summer, we play a lot of golf, hike, fish, run, bike, whatever it is your flavor. We have 300 days of sun, and that's what we can do. We help you to find out who you are as a trader and find out what your best method is. One thing, the last trader I had last week, he came to me and said, listen, I was making money consistently selling options. And I said, oh, here we go. I've heard this story before. He said, I was selling options very consistently, just picking up pennies in the corner. And I said, yeah, until that steamroller came. And he looked at me like I knew it, like I was reading his mind. And I said, listen, selling options is great if you know why you're selling it and when you're selling it. But all it takes is that one crazy volatile moment in the market, in the world, whatever it may be, and whatever option is you were selling can blow you right out of this game. So I don't recommend selling options. Then he said I went from selling options and making very large consistent money to scalping. So I went from that to being a scalper, and I was just I was afraid to lose anything then I was protecting. I was basically playing defense. And I said, so let me see what happened there. You were paying more commissions and you were winning money small, and then losing big because you were so tight. And he's like, how'd you know? And I said, because that's what happens in the scalping game. Unless you're disciplined enough to put your stop in exactly 2 ticks above where you're enter, you're gonna get just squashed and eaten up both in commissions and in that one, again, volatile trade that just knocks you out of the game. So when he came to me, he was like, wow. He goes, I spent a week with you, 6 days actually, and I'm totally calm. I'm going home, and I've made enough money to pay for 3 weeks of education with you. My wife's happy. I'm going home. I've got time now to step away from the screens. I don't have to sit out in front of them all day. And, to me, that's what it's all about. Can you find a way to do this and fit your lifestyle? Now, if you want to use this across 3 different markets, the Asian markets, the European, absolutely you can. If you're young and you're a gunner and you got time and you want to make more money, I've done it. I've been there. So bottom line, we have a $4.99 week trial of our exclusive Twitter feed. Go to www.misstrade.info. Sign up for that $4.99. That's $4.99. One large Frappuccino, guys. I mean, it's silly. It's just silly how people squawk about that type of thing. Try it for a week. If you don't like it, there's no commitment. If you don't like it after 2 weeks, there's no commitment. I'm not looking for any long term. I want you to learn how to trade the right way. That's what we're trying to do here. I'm trying to get rid of those pitfalls that are out there in the marketplace. As far as my time frame, I'd say 80-90% of my trades are intraday, and then another 20%. So 1 out of 5 I might hold for a day to a week or two. So that's my typical makeup of the trades that we call in the trading in the private exclusive Twitter feed. Jed, any questions you want to throw out there? Anything you want to add? Hop on here. I'll mute for a second. Take a sip of water. All right, Jed, we can't hear you. You might want to turn that off and turn it on again. As far as the average day trades holding time, anywhere from, I would say on average half hour to 2.5 hours is typical, and sometimes I may be in a trade for the rest of the day. So as far as scalability, I always say this is a scalable business. Trading is a scalable business. You can trade one lot with the way we trade, or you can trade 100 lots. So if I say I'm selling one, you could be selling 100, and I'm not going to, your footprint at 100, which is a pretty good size trader, it's not huge. I've traded up to thousands of contracts on different things, and I'm not a big trader. So you need to focus on whatever your size is, and this is absolutely suitable for any size of trader. It's a scalable business. If you want to trade 1 lot, 10 lot, 100 lots, you'll have no problem following our service. Website? Yep. Hop in there. So let me jump in here. A couple questions. Footprints. Jed, can you mute yours? Thank you. Um, Footprints, again, to me, it's a great tool if you're into micro scalping the market. I don't need that much information. I do use a pretty simple TPO, and what that looks like is really pretty simple. So I don't prefer to use all the noise that is involved in a footprint. Here's what I use. Again, I use NinjaTrader for my primary trading. And I use fin-alg.com as an add-on product that you can buy from them. It's not my company. I've bought it, and it works very well. That's all I use for looking at the profile. I use different time frames. I also utilize simple candle charts, and I basically look at 5, 10, 15, 30 minute, 60 minute, 120 minute. And I recommend multiple time frames is always something that we look at as traders. If I'm seeing all time frames going the same frame, that's a very strong trend, whether it's up or down. If I'm seeing the intermediate term all flashing green like the S&P has been, and then I start to see a change in the 1 minute, 5 minute, and 15 minute, it may be an area where I have coverage. So we can work that out. As far as how the trade calls, I've found that Twitter is the best way to deliver information. You can set up Twitter to be sent to your phone. If you just want SMS just from MissTrade member, that's fine. You can set it up that way. TweetDeck allows you to just get a column of just what I'm doing. There's tools, ways to do this that Ryan and Jed can help you to walk through this. If you want SMS, we'll offer that to you. But I've just found that Twitter is the best way. If you want to really learn how to trade, and again, that's what our hope is. Come trade with us. Get on a plane and come here. You won't be disappointed in your time here. I like doing it because I get bored sitting in front of a screen all day. Just as we talked about, good man must know his limitations. I like people. I like talking to people. I like being with people. So for me, trading there's a bad piece of trading for me there because I can't. Unless I have students come with me, it's hard to have. I don't work for a hedge fund anymore, so I don't work on a trading desk with other traders who I can, share stories with and talk about. So I miss those types of opportunities, and that's why we try to educate here. Let's see. Other questions? Anybody? What other questions was I missing there, Jed? That didn't want to let slip by here. So Jeff, send us an email, info@MissTrade.info. I'm happy to work with you on what may work for you. You tell me what works for you. Ryan is always trying to satisfy the outliers that are out there. Most people, again, 99% of the people work fine with SMS or Twitter feed. So if you need something that beyond that, just let us know. Ken, hey Jed, turn that off again, please. Thank you. Ken, you're asking software that you must buy to obtain market profile. Again, if you have CQG, if you have eSignal, I don't know what you use. I can just tell you what I use is Ninja. I use Ninja and I use Thinkorswim for some longer term profile charts. Outside of that, as long as you get your market profile data, I don't care what you use. I have no stake in what you use. I would just suggest, and I can tell you what I've used, and I've been in this game for long enough to try most things. I haven't tried everything. But what works for me is Ninja with a FinAlg add-on that cost me $250. It's not expensive at all. That's a one-time thing. It's on all my charts. You can find them. I put it on the website. So just figure out what works for you and keep it simple. And I do trade live every day. And if I'm not there, I let people know. If I'm taking a week off because it's August and it's slow, I'll let people know. You do have to have backup plans. You have to have a phone broker. I would always have a phone number to call if you can't get a trade on because your software, your internet's down. These are tools, okay, and all tools break at times. So you guys have to have backup plans. Very important point here. So send us an email. Again, info@misstrade.info. I know Kevin and Kathy are trying to wrap it up here as we get to 3:30. Any questions you have, Ryan and I will try to get an answer to. Again, I take 2 to 3 students a month. Any more than that is, I need a break. Although I like people here, I don't want them here every week.